Welcome to the Precious Metals Precious You podcast, sharing advice and insights into wealth, wisdom and prosperity. Learn from industry experts on how to secure your financial freedom. Expand your knowledge about precious metals. Take control of your wealth with a self-managed super fund. Empower yourself to become the best version of you. It's all about wealth, wisdom and prosperity. Welcome to this edition of Precious Metals, Precious You. It's so great to have you here. So on today's podcast, we're going to talk about something that has been increasingly on people's minds, and that is their superannuation. So what are you doing about your superannuation? Is it something that you've thought about? Are you thinking perhaps that the yield year to year could be much better? Are you thinking of potentially looking at a self-managed super fund as an alternative? So all about self-managed super funds, superannuation as an alternative. My guest is Domenic Costanzo, a tax accountant who's also a specialist in self-managed super funds. So we're going to be talking all things superannuation and why and what you can do to control your future finances, because of course your superannuation is your retirement savings plan. So I'm going to welcome Domenic into the studio. Hi, there you are. How are you?
Yeah, good. How are you?
Yeah, wonderful. Thank you so much for joining me today. It's really great to see you as I'm just slightly adjusting my screen. No one needs to see my whiteboard. So look, I wanted to just jump in and introduce you. You've had a great journey as an accountant. Now, first you worked with an ASX listed company and then with a well-established mid-tier chartered accounting firm before you then moved across to join your father's business, your father being Rocco Costanzo, who launched Costanzo Associates over 15 years ago. So I'm just curious to hear about your personal journey, Domenic, and the transition.
Yeah, so I was lucky enough, to come from a family of accountants with my dad working at the ATO. So he was working at the ATO over 30 years ago. So I guess, as you can say, it runs in the bloodline, I guess. And we've always been interested and always savvy around our money, super, and tax, I guess, from that perspective. So I was lucky enough to really get involved in self-managed super funds back in 2017. With my previous employer, we were dealing with high net worth clients and doctors and surgeons, and basically that's where I picked up that there was a reason why high net worth clients were getting involved in self-managed funds, and it kind of opened up a world from there, and it kind of grew from there, and my interest, I guess, grew from that point onwards. So.
Interesting that you mentioned you were dealing with some high net worth clients, or a majority of them, because a self-managed super fund is for any Australian. 1993, my research said that 1993, the Hawke-Keating government established the Superannuation Investment Securities Act, the SIS Act, if you like. So they've been around for over 30 years in Australia. The issue, I believe, though, and correct me if I'm wrong, but not all accountants are qualified as self-managed super experts as you are. So you do need an Australian financial services license, don't you, Domenic?
Correct. And there's a fine line between providing advice and obviously running a super fund and assisting the client with that. And that's where you need to be aware of providing advice, general advice versus specific advice. So as you know, we guide our clients where we can, I guess, within the rules, and we try and ensure that we're not providing specific advice. And we do leave it up to the client to, we give them all the advice, all the information, and they can usually go off and complete some research now themselves on the internet, I guess, and other podcasts and I guess go from there. So that's what we guide the client, I guess you can say, and and they come back to us with what they want to achieve. And usually super is a pretty good outcome for most clients, I would say, setting up a self-managed fund. So
before we jump into why take control of your super, which is the topic for today's podcast, one more personal question: what motivates you, Domenic? What gets you out of bed every day?
Well, I guess really just growing with the client. So I do enjoy having that personal relationship with all of my clients, where I know what you want to achieve and how you want to get there, and we usually along the way are there to basically guide you and hold your hand and provide advice where we can, because we do find in the industry that most accountants are quite busy and they don't prioritize having an annual meeting with their client and also just providing some advice along the way. So that's what we find is lacking in the industry at the moment.
Do you think that being a family-run established business, it gives you that opportunity to have more of a close and confidential relationship with your clients and say, the bigger mid-tier accounting firms?
Yeah, correct. I mean, we do pride ourselves that you're not just a number, and that is on our website, but that is true. And if you speak to most of our clients, we do enjoy getting to know the client and started to build a relationship along the way. So yeah, certainly that is true.
The discretion is absolutely critical, of course. And I mean, people can talk about a lot of things, but when it comes to their finances, it throws up so much emotion, doesn't it, all the time? Let's now focus on why take control of your super. So I know I have a self-managed super fund and I wanted to take control, empower myself. Why do you say that clients are setting up a self-managed super fund to take control of their superannuation?
Yeah, so we're finding at the moment that there's a couple of benefits with it. I guess as you would know, at the present time, most funds like Australian Super or Host Plus are purchasing just the general stock market at the moment. BHP, Woolies, Coles, and the larger companies, Commonwealth Bank, which has done quite well, I guess, but they're just buying the share market basically, and it's very limited, and you haven't got control of the asset, so that you can't, you're not basically involved with the management side of that self-managed super fund. So that's a main reason, I would say. So most clients like that control over what they buy, when they buy it, and how they buy it, which is the only way you can do that is through a self-managed fund. So that's the main reason, I would say. The other reason would be, I guess, specifically with precious metals and gold, is that it's tangible. So by purchasing gold or silver, you can store that at home, which we can get on to. We can touch base with that later in the podcast. But some clients do like that, and they can see that they're where their retirement funds are, and they can touch and feel that, I guess, in a roundabout way. And the third benefit at the moment we're finding is borrowing power. So a lot of clients are basically, they've maxed out their borrowing power in their personal names, and they're now looking to buy another rental property or another property, and now looking at self-managed funds to do that, because you do get extra borrowing power through that as well. So
absolutely, but that's why you need an expert, because a superannuation retail fund and a self-managed super fund, exactly the same under the SIS Act. The major difference is that in a self-managed super fund, you're in control, and the assets you can purchase. Now, of course, you mentioned bullion, and As Good as Gold Australia is a bullion dealer. Here's a kilo of silver just to prove it, and here's 100 ounces of pure gold. So the assets that you can purchase in either a superannuation account or in a self-managed super fund, properties, so residential, commercial, and land. Bullion, of course, you've mentioned, and we obviously deal with clients for bullion purchases. Cash, share stocks, bonds, your ASX listed, your blue chip, as you've mentioned as well. And finally, as of a few years ago, the cryptocurrency, Bitcoin and cryptocurrency. So why I mentioned that, there's also collectibles as well, under the legislation of collectible, what is known as a rare collectible, and under the ATO guidelines. But the whole purpose, as you said, they're the assets you can purchase, but the superannuation companies have never purchased bullion from us. And one of the main reasons for that is there's no yield. It is an asset that will grow mid to long term, just like land, really, where you leave it until you need to sell. So having that empowerment is exactly what the ATO has been saying, and our clients are saying as well. Record numbers of people are setting up a self-managed super fund, record numbers, because again, going to why control of your super, as you said, Domenic, it's because people want to purchase the assets, and they may not have a couple of $100,000 at all, but they do within the superannuation account. So that's when you come in and you establish their funds.
Yeah, great. So it's, and like you touched base, it's a growing area and a growing industry. And I guess, ultimately people do like that control over their super, so which is fair enough. So
there are two types of SMSF structures, aren't there? One is the more popular, which is setting up a company, a PTY Ltd, and you become the company director, and you can have a few. How many under that structure can you have in a self-managed super fund company structure, Domenic?
Up to 6, I'm pretty sure at the moment, 6 members. So
the other alternative is a trust. You can have up to 7. That's correct, 7 in a trust.
Yeah. So basically, with the individual, so the difference is this corporate trustee, okay, which is a company, which allows you to have 1 member. Okay, so if you would like just yourself to be the only member of the super fund, and you would look at, the only option would be a company set up, and you would be the sole director and sole member of that super fund. The other option would be individual trustees. So that would require a minimum of 2 members. So yourself and obviously someone else, usually a family member, would be the other trustee member with you. That is cheaper to set up. The individual trustees is cheaper to set up. However, you do require 2 members, like I've mentioned, and I guess the second member doesn't have to have a member balance, so they can just be in that super fund for the purpose of just setting it up, you can say, and then one active member can be in the account, I guess. So that is a potential. And there are some advantages and disadvantages to both. With a company, it's a lot, I guess it would be a lot easier if one member were to exit, or if there was unfortunately a death in the super fund. So it's easier to change that company around and remove a director. Whereas with individual trustees, it's a little bit more paperwork involved in that. And obviously the setup costs are higher with a company setup compared to individual trustees. So that's another difference. So
I'd like to talk about costs maybe towards the end as well, because it's always a really good to get our audience to think about, okay, what their investment is and what the outcome can be about taking control of their super. So we've noticed that again, just to reiterate, you could be an individual company managing your self-managed super fund as a company director, or have more than one. Or you can be a trustee, but you need 2 or more, up to 7. Why I wanted to make a point of that is because we're seeing a lot more families that are setting up their self-managed super funds. So you have the mother and father, generally speaking, so the parents are the trustees, and then they have their children also listed as trustees, but non-working yet. Are you seeing that growth as well?
We are. Some families prefer not to. It just depends, because there's obviously some transparency there around member balances, and I guess everybody's got the accounts, so they can see member balances. But yeah, if you're looking to, I guess, to invest with your children and build family wealth, I guess, then that I would say a super fund structure is a fantastic structure to set up with all family members involved. And we do have some clients that do it. So it's not frowned upon, I guess. So
absolutely.
Yeah.
But this is part of the confidential consultation that you have anyway, to work out, so you want to control your super, great, what's the best structure for you, and then having some discussion around if there needs to be changes in future, you can accommodate them as well. That makes perfect sense. So we, the regular retail funds, if you like, superannuation retail funds, are easy enough for you to then assist the client to close down that retail fund and then move the funds across into a self-managed super fund. But there are funds that unfortunately you can't actually close down, so to speak. Do you want to just mention specifically those funds?
Yeah, there are. It depends on which state and federal. If you've got a state or federal super fund set up, so some of them, I think there's a defence fund that you can't, and there's also an education fund that you can't roll over to a self-managed fund. Majority of them you can. So there are some disadvantages though to rolling over some super funds if you are allowed to transfer it over. Majority of them, if you're with an Australian super, a Host Plus, which is an industry fund, there would be no tax implications with rolling that over to your self-managed fund because it's already been taxed in the super fund. If you are looking to roll over an untaxed super fund, so you can look at your member statement and look at the breakdown of it, but if it's untaxed, the balance in there, it basically means that the super fund hasn't taxed your contributions at 15% when they've been received. So if you do roll over that fund to a self-managed fund, the government will basically ask for the 15% tax on the rollover when you do roll that over to your self-managed fund.
So let's talk about taxes now. I think it's really important to do a bit of a comparison. The self-managed super fund, is it correct that the 15% tax that you pay at the end of financial year, so not when you're setting up and with the rollover, but at the end of, say, your first year setting up a self-managed super fund, and you would look after, you and your team at Costanzo and Associates look after the tax auditing side as well. 15% is the taxable amount only on the proportion of increase of your assets within that 12 months.
No, incorrect. So it's basically only 15% tax on the contributions. Yeah, so the so only contributions from your employer or any personal taxable contributions, so concessional, they call it, that go into the fund. Any growth from your assets is untaxed. Okay, at the moment. Yeah, so
at the moment.
Yeah, so if you do exceed the and this is what Labor and Jim Chalmers are trying to introduce now, is if your member balance is above 3 million, that balance above it will be taxed, the growth on the assets. So that's being looked at now, but that for majority of members, I would say that any growth in assets throughout the years up until retirement will be tax-free. And that's around the benefit of super funds is if you do sell your gold bullion or any other assets in your self-managed fund, usually after age 60, if you meet a condition of release, which is usually when you retire or age 65, you can sell it tax-free.
Tax-free. So that's essentially what you do with, say, bullion, is you would sell only the smallest amounts, maybe a couple of ounces, and in maybe 5 to 10 years, a 1 ounce bullion, so there's 1 ounce, which is right now 5,150 Australian dollars an ounce, that can be $8,000 to $10,000 an ounce, but the landscape is going to be completely different, so we'll be in a digital currency, then you will only sell what you need back to a bullion dealer, a reputable bullion dealer, who would then buy that product back, and that's all you need to potentially live that year. It's not, you don't cash out and have $500,000 and sell all your assets, if not more, sitting in a digital account. I mean, that doesn't even make sense, does it?
Correct, and that's the main benefit, where it's peace of mind, and this is where any assets that you have in a self-managed fund, as long as you don't sell the assets before you retire in the super fund, you have peace of mind that when you do retire, or if you hit age 65, that will be tax-free, which is quite extraordinary, and it's the only tax structure in Australia that allows for this. So.
Touch wood on that one. What happens if you need to, before you retire, you might need to sell some gold and silver, so you've purchased some. What happens there if you need to draw it from your self-managed super fund?
Good question. So that will be taxed at 15%, the capital gain. So only the capital gain will be taxed, and you will receive a discount on the capital gain, which is 1/3. So instead of paying tax on the full capital gain, you'll pay tax at 15% on 2/3 of the capital gain. So not the gold you're selling, it's the gain that you're paying tax on.
Thank you for that explanation. You mentioned earlier the Australian government, particularly the announcement from Treasurer Jim Chalmers. The proposal is $3 million plus that you'll be paying pre-earned capital gains. So you haven't even sold. A lot of people are really up in arms about this, aren't they?
Yeah, I think it's a dangerous path to take, especially with taxes, because it's taxing an untaxed gain, or taxing an unrealized gain is a dangerous game, and it basically opens up other areas potentially for the government to look at, and that's what people is, I guess, a little bit concerned about, and it's really funding that tax. If you've got there's some farmers with farmland in their super fund, which is not a liquid asset, or other property where you have to pay the tax, but you haven't got the cash flow to pay that tax because it hasn't been realized. So that's the downside to that policy, I think.
Absolutely agree with you there. It's very concerning. My stats said there was about 80,000 Australians that sit in that category of $3+ million in their self-managed super funds. So there's a lot of businesses and people.
Correct. Correct. And just to touch base on it, I mean, the other scary part about it is that it's not indexed, and it's a secret tax, I call that, where the 3 million balance should be indexed, even to CPI, because I did some rough calculations, and if a person in their 30s put in $30,000 a year, by the time they reach their 60s, that would be worth 3 million. So you could say it's a forward-looking tax from the government that potentially looking at taxing some future. If you're in your 30s, it potentially could affect you in the next 30 years. So
yeah, I'm going to do a bit of a rewind. Let's do that again, so it's really clear. Great example. So a 30-year-old is contributing $30,000 a year. Mm-hmm. By the time they're 65, what's your calculation? Just as at index at CPI?
Index CPI, with a considerable, I think it was around about 7 or 8% growth a year. With the market and I'd put that into my calculations. It was over 3 million, your balance. I think it was around about 3.2. So concerning, I think, because it just shows the intention of the government potentially, where they're not looking at that. They're saying that it's not affecting many people now, but that's not to say it will not affect many people in the future, I think. So that's,
exactly why I said, look, at the moment, where it stands is around 80,000. That could go to 800,000, if not more, Australians. Now, you mentioned the yield or the increase. So gold has increased in the last year to date, the last 12 months, as has silver. So gold has increased 40% and silver approximately 30%. So as far as why taking control of your super, because in our opinion, you can purchase bullion in your self-managed super fund and at the increased the store of value and the worth that it is 12 months later, as we hurtle towards this very uncertain major change in the great financial reset of 2030, it is such a consideration that I think more and more people should find out about.
Yeah, certainly. Agreed.
Thank you. Let's just have a couple of other topics to ask. And you mentioned before costs. So can we go straight to cost, Domenic? How much, if I came to you and your family business, of course, you're experts in self-managed super funds, among other financial services that you do provide. How much does it cost to set up a company with you? Individual company, self-managed super fund, company director, what's the cost? What am I looking at?
Yeah, so with setting up with a self-managed super fund and a company, you would be looking at $1,200 to set that up. That would include the ABN, tax file number, rollover of funds, setting up the company, and I guess that would cover most of the costs with setting that up. And as you can imagine, ASIC, the ASIC charges are around about $700 in that fee. So
that's more than half.
Yeah.
More than half is just to pay ASIC to set up your company.
So quite competitive.
Limited.
Yeah, quite competitive we are with setting them up. So yeah, and individual trustees. So if you're looking at 2 or more members and you can set up a super fund with individual trustees, you would be looking at $550 to set that up. So
per individual?
No, in total.
In total?
In total.
Wow. Okay, that's very reasonable.
Yeah, quite affordable. So
what about the accumulation of annual fees and the tax audit? What am I looking at, company versus trustee?
Same costs. So the annual fees would be the same cost. The only extra charge would be ASIC. So ASIC charges an annual review fee for a company, and I think it's $69 at the moment for that per year, approximately. So they charge a fee for that. That's not us. That'll be charged from ASIC each year. And your admin costs, so your tax return and auditing fee would remain the same. And that is $1,500 a year, flat fee for As Good as Gold members. And that would incorporate, buying gold bullion, and I guess a bit of interest in a term deposit account would be fine with that as well.
So you're offering, and I was going to just end with this too, but because you've said it, anyone who listens to this podcast, contacts As Good as Gold Australia, wants to talk to you, if not, well, obviously you personally, if not any of the other self-managed super fund experts, but you might be very busy, Domenic. You're actually offering a less rate, so it's a great offer where $1,500 plus GST for all the auditing, including having an independent auditor make sure. I think there's about 5 documents that are all done and dusted. Is that correct?
Correct. So we cap the fee for As Good as Gold members and clients, and I guess, and it is a very competitive fee, as you know. And basically, you're looking at, we are lucky enough where our auditor, we give enough work to our auditor where we basically pass on our special audit rate to our clients, and that's hence why the fee is so low. So
that's awesome. Thank you. Very, very comparable. So does that include unlimited phone calls? You're obviously monitoring any changes in the ATO and advising the client as well across that 12-month period. Is that something that is included in these fees?
Correct. So most clients email. They prefer to email, but we do respond within 24 hours, and it does incorporate phone calls and emails. So and a bit of advice along the way.
I was just going to say an investment strategy discussion, which I would think would be critical at consultation time.
Correct. Yeah, we obviously we prepare the investment strategy for our clients. They review it, and I guess any changes are made accordingly. So
Well, then I'd have to say that, Domenic, that's really one of the main points of difference that it sounds like you're offering, is a discounted rate, but the service stays the same. So thank you for that offer for as good as through As Good as Gold Australia. And you have clients. I mean, they don't necessarily need to see you. You are based in Adelaide. So you could do a Zoom call. You could be a client that's based anywhere in Australia. You don't have to see them in person. You can do a Zoom or a Teams or a virtual meeting as well.
Correct. And we do. I mean, most clients prefer a phone call, but we're happy to have a Zoom or Google Meet meeting if you prefer that, I guess. So yeah, definitely happy to accommodate.
Okay. Well, maybe one of the last things I'd like to end on is, Domenic, what are your top 3 most important suggestions for any of our wonderful listeners who are contemplating to set up a self-managed super fund for financial freedom in their retirement? What's your top 3 things that you would say to get them to consider this?
Yeah, so number 1 would be the tax benefits around a super fund. So I think most members should consider that, it is a low tax environment. And if you structure it correctly, no matter your age, there are some long-term benefits there to when you retire, I guess, and that, they are basically tax-free, proceeds where you can access that. Number 2, I would say, would be the flexibility. So the control of, if you were to buy gold bullion or silver or any other asset in your super fund, it's, you are in control of your financial, outcome, I guess, and destiny. And I guess you can grow and, be involved each step of the way. And 3rd, I would say, would be the fees. So I guess really from our perspective, we offer a low fixed fee for As Good as Gold members. And the main reason would be really so that everybody can get involved with a self-managed super fund. It basically becomes comparable to an industry fund charge, I guess, if you have a low balance super fund. And, if you have as little as $100,000 or $150,000 or $50,000, the low fee will make it accessible and affordable for you to get involved, to buy some gold or get involved in the share market or manage your super. So
I can take control of your super. You've just summed that up perfectly. Domenic, thank you so much. Domenic Costanzo, tax accountant, self-managed super fund expert. It's been wonderful to speak with you. Thank you again for the offer. As well, for anyone listening, to contact As Good as Gold Australia, contact me, our team, and we'll introduce you. The first session is also a complimentary consultation with you and your team anyway.
Correct. Yeah, it is.
Wonderful. Thank you so much.
Thank you. Thanks, Carmel.
Good to see you.
Good to see you too. Thank you.
That was Domenic Costanzo, who is the tax accountant and SMSF expert, working with Costanzo and Associates. Very generous for the offer as well. I think, lots to consider there, and they make it very easy for you. So thank you so much for listening to this podcast of Precious Metals, Precious You. And as always, look after your precious selves. I'll see you for the next podcast. Take care.
Thank you for listening. All information in this podcast is general in nature and not constituted as financial advice. Looking forward to welcoming you to the next episode of Precious Metals, Precious You. It's all about wealth, wisdom, and prosperity.